Well, the big question, though, is what the Reserve Bank does next. And perhaps there was some clues in all of that in its latest economic forecast. They were released as part of the latest statement on monetary policy, which was released alongside this rates decision today. Well, Paul Bloxham is the Chief Economist of HSBC in Australia, also a former economist for the Reserve Bank. He joins me now in the studio. Paul, many thanks for your time. This is the key now for the Reserve Bank, downgrading these economic growth forecasts. It raises the question about just how many more rate cuts are required to get Australia's economy growing back to what is its long-term average of close to 3% a year.
Well, so the starting point here is actually that growth is picking up pace in Australia already, and actually growth is picking up pace to a pretty sluggish rate. But the RBA is telling us at the same time we shouldn't expect the economy to grow much faster than this. If the supply side of the economy is going to remain weak, as the RBA is now assuming, actually the potential growth rate for the economy, as they've said, is 2%.
Can I put it out to you? That's bad news for our economy. That's bad news for the government that's obviously done a whole bunch of spending and borrowing to try and put a whole lot of social reforms in place. The one thing that could actually improve Australia and improve the government's lot is if the economy grew faster, which is the reason why we've got an economic roundtable.
Well, it is absolutely bad news that productivity is going backwards at the moment. And it's bad news that it's going backwards and it's been so weak that the central bank has been actually having to revise down its own working assumption because it had an unrealistically high assumption.
So here's the forecast here on the screen of the economic growth forecast that they've got. Looking from their May statement to the August statement, you can see they've downgraded December 25 this year from 2.1 to 1.7%, which is a decent downgrade, you've got to say.
Absolutely. And it's driven by the fact that they have had an unrealistically high assumption of productivity. They've had to revise that down. And it's an acknowledgement, at least, that Australia's economy can't grow as quickly as it used to unless we do something about lifting productivity. Now, the reason why the government is trying to redirect the conversation to another area is because the RBA can't do anything about productivity. It is literally a working assumption.
Who can do something about productivity?
Well, the main source of productivity growth, quite frankly, is if businesses are prepared to invest and innovate and find ways to do things that improve efficiency and so on. That's where most of the productivity growth comes from. But as far as policymakers are concerned and what they can do, they can set the environment to encourage businesses to do that. So we need to look harder at increasing competition in the economy. We need to look at the regulatory environment and the tax system, because we need to make set those systems up so they encourage businesses to make change that lifts productivity.
There was one very interesting forecast in that statement of monetary policy, and that was the Reserve Bank itself in its own modelling presumes that the cash rate is down at 2.9%, which is the best part of 2 or maybe even 3 interest rate cuts from here. Is that in your forecast as to where they go?
Look, the first answer on this is that the RBA, again, has an assumption. They assume the market pricing for their cash rate assumption, so their forecast. So it's not a promise, it's not a commitment. They're not saying they're going to cut interest rates 2 or 3 more times. They're saying they're working with that as a base assumption. Do I think they're going to be able to cut interest rates a bit further? Yeah, my central case is that we get 2 more cuts from the RBA in this easing phase. But I think where it's most interesting is to think about whether that is actually going to arrive. Mm-hmm. And I think there are sort of 2 competing forces. One is the one we've talked about already, which is that productivity is very weak. So the domestic cost base is actually growing quite quickly, and that may very well put a bit more upward pressure on inflation than the RBA is assuming. The competing force, the other thing that's pushing it lower, is we're in a global downswing, and this global trade war that's been going on, that tension is going to, we think, put downward pressure on imported goods prices. So there's these 2 things running in different directions, and it's not entirely clear yet which one's going to be the one that plays out more. And it may be that the RBA doesn't get to cut as much as all of that.
So just having a look late this afternoon on the markets, you can see that there's the next meeting, September, there's a 35% chance the markets say of a rate cut and a 65% chance of no rate cut. The next rate cut, the markets are saying, basically comes in November. Is that basically what your analysis would suggest?
My central case is they cut in November and they cut again in February of next year. But what I'm trying to emphasise is that I think there's some risk around that. And I think the risk is probably tilted to the idea that they might not be able to cut as much as all of that.
Just a really quick one for you. The Treasurer today talked up the economy big time, said, hey, we're on track, we're learning. We know it's a bit sluggish out there, but things are going in the right direction. Is that your sense at the moment of the economy, or is the economy really not as healthy as what the Treasurer would like us to think?
I think the RBA is in a good position. Inflation's back at target and we're fully employed. But I think we need to strive harder to get productivity to lift. Otherwise, we don't get to lift living standards in the same sort of way in the future that we have done in the past.
Did you get an invitation to the Productivity and Economic Roundtable?
It's a pretty limited set of people have been invited to the actual roundtable, but yeah, certainly involved in various aspects.
Good on you. Well done. Always good to chat to you, Paul Bloxham. Many thanks for your time.